All right, welcome back to this series. This is the final part in this series, but I've saved the best till last because in this video, I'm going to teach you how to build a really solid trade plan. I'm going to walk you through how to backtest a strategy, and I'm going to give you loads of goodies, including a backtesting template, trade plan template, and also this entire trader mind map, which you're going to get as part of this video. So let's get stuck in. All right, so let's get stuck into our document here. And if you haven't got a copy of this document, you've missed out. You need to go and download this. You can go back to the first in this 5-part series where you can work through this with me. But we're going to get to this trade plan section now. And I'm going to talk you through what makes for a good trade plan, things you need to have in mind, things you need to have objective in your trade plan if you want to be a consistently profitable trader. And we're going to start with markets. Okay, so the first thing is you're going to have a section in your trade plan of what markets you trade. Okay, so what instruments, what pairs, what Forex pairs, what indices, what futures, what stocks. You're going to have to know what markets you're allowed to trade, and that's going to come from backtesting, which we're going to get to in just a bit. So markets you are allowed to trade, okay, as dictated by your test results. Okay, so if you've tested some markets and you've tested a strategy and you found them not to be profitable, well, then you're not going to want to include them in your portfolio of markets, right? So markets you trade is what's going to be included there, okay? And also in there is markets you cannot trade, okay? Now you might have certain markets that you can trade in certain times and things like that under special circumstances. Those are all things that you're going to have in this section of your trade plan with notes next to them, okay? Next thing is timeframes, okay? So timeframes, what time frame do you trade on? Do you use multi-time frame analysis? Multi-time frame analysis. Do you use higher time frame to form a bias? Do you use a trading time frame? Do you use a lower time frame for entries and management? Okay, so you're going to have what time frames you're allowed to trade. Do you just only trade on one time frame? So this is going to be things like daily, 4-hour, or the 240 chart, the 60 chart, etc. Okay, 15-minute, 5-minute, and so on. If you're new to trading, I highly recommend you don't go any lower than the hourly because it's going to be really hard to maintain consistency. The next thing you want in your trade plan is the time sessions. So as time frames is more to do with what time frame you trade, like what sessions charts that you look at to place the trades. Your time sessions are like when in the day. When in a day you're allowed to trade. Is it the London Open? Is it the New York and London crossover? Is it the New York Open? Is it afternoon? Is it night? Is it the Asia session, right? Or do you trade certain times of day? So is it, I trade from 06 a.m., get my setups done until 12 noon, okay? And then that's it. I'm done for the day. Or do you trade all day? Or do you trade in blocks of time? That information is going to need to go into your trade plan. What we're building here is a board game set of instructions that are objective so that you maintain consistency in your trading. And some of the rules that you put into this trade plan are rules for rules' sake. They're just to make you do something consistently, okay? So that you don't break that consistency. Because have you ever tried to repair something or troubleshoot something and you do too many things at once and you don't know what you did to make it work? Well, we don't want to be in that situation in trading because it's very difficult. You have to go back to square one to start making it profitable. So we don't want to do that, right? So time sessions are when you're going to be at the charts, and also when is most active for you, for your strategy, okay? When is most active, right? Then we've got the setups. So most people associate the setups or the trading strategies with the trade plan. That's it. They think that's the entire trade plan. Actually, it's just a small segment of your trade plan. Okay. And as I said, in a moment, I'm going to show you how you can get a copy of a sample trade plan And I'd love to see you guys fill that in and post in the comments what you've included into that trade plan as well. But the setups are basically your entry criteria. Okay, entry criteria. It needs to be clear and concise. It needs to be consistent. Okay, so this is basically when you're looking at the setups, what are the rules of engagement to get involved? So do you look for a double bottom, and then on that double bottom, do you look for RSI oversold, and then do you look for divergence on the second test? And if none of this makes sense to you, it's because you've skipped the last episodes of this series, because we covered all of that stuff. But you want to make sure that you've got rules of engagement that are clear and you can follow them. If you do get RSI divergence, when do you enter? Is it next bar market? Where does your stop loss go? Where does your entry go? Where does your target go? What's your position size? All that kind of stuff is to do with your setup criteria. Okay, entry signals. You might have a certain candlestick signal, right? So candlestick signals. So I'm just putting ideas here, but these are the kind of things that you want to have in mind, right? Now, pre-market analysis. This is what you're looking at. This is your routine, or what you do prior to getting involved with a trade. Now, as I said, in a bit, I'm going to show you an entire mind map that you can go and download, and that's going to really open your mind as to what you need to include in a solid trade plan, because there's a lot more to it than a lot of people think. They think they can just go and download an app and start trading into the sunset. It doesn't quite work like that. So what we want to do here is we want to look at what we're going to do before the market. So do you do a checklist update? Do you do a watch list, build a watch list? Okay, so do you go through a checklist of, I need a bullish trend, I need a pullback, I need a the deceleration, I need a certain price action pattern? And then do you form a watch list based on how many are close to setting up to the setup criteria, the entry criteria? And you might have a 4 watch list or a 5 watch list. Do you do correlation risk? Okay, so you're looking at correlation and filtering out, some kind of filtering exercise where you filter out different markets dependent on too many of the same thing, or correlation and things like that, right? So what's your pre-market analysis? Do you look at news? Okay, and maybe high impact. So you look at high impact news and you go, well, there's certainly high impact news out when I'm about to trade, so I want to lay off of that, or it could affect that, and that I'm going to stay out of that, right? Or it might make you enter that, right? So these are things that you want to mull over during pre-market analysis. You also want to think about, like, pre-market, how you feel. Okay, so you really want to just have a way of going, emotions. Are my emotions in check? Okay, am I fearful of staying out of the market? Am I greedy? Am I desperate to get into a trade? And all of those things are going to be part of your pre-market analysis. Okay, next thing, another thing in a pre-market quickly, it might be yesterday's close, or reading the tape from yesterday, just seeing what happened yesterday. I always like to look at the yesterday's close just to see what happened yesterday, right? That's another great thing to do pre-market. Then during the trade process, okay, so what do you do to ensure that you're not jeopardizing your trading system? What do you do? What do you do once in the trade? Okay, now this could be things like you go for a walk. It could be things that like the routine or the frequency of chart checking. Okay, so how often do you check the charts? How often are you allowed to check the charts? Do you stay at the chart until the trade's done? Maybe you're trading lower time frames. What is your process during the trade? Do you have a news feed on? Do you have are you in a community? Are you just talking to other traders? Sometimes just having company can really help with being in trades. I know that firsthand. Quick story. When I first started trading professionally, I funded my account And 4 weeks later, I had less money in my account than I started with. And it was only because I was around certain people that motivated me and encouraged me to keep going and trading the plan, that the 5th week I went into new equity highs, into profit. And that was the moment where I 100% believed in my system and trusted my system. Until that point, it was very difficult to trust it. And I may have given up, but being around the right people was a great thing to do. So during the trade process, then we want to talk about after the trade. Okay, so do you log the trade in journal? Okay, do you write notes? Okay, do you close off trades certain way? Do you kind of take off of watch list? All these kind of things you want to have written down so that you're not reacting in the moment, and it's a process where this is telling you what to do. Okay, so after, how do you do the review? Do you screenshot it? Do you video the trade? Lots of traders use Loom to video the process and then rewatch it afterwards. So that's another great tip, by the way. So that's post-market analysis. Do you look at the market and you say, right, okay, well, what's happened? What did I think would happen? What did happen? What do I think is going to happen next? Do I need to adapt? Do I need to carry on and keep looking for more opportunities in that direction? Do you look to add to your position size? Do you look to cut your position size down? All that kind of stuff is post-market analysis as well. Then there's habits. Okay, so these are things like your routines, your rituals, your daily, how you look after yourself, how you show up to the market every day. Imagine a tradesman or a athlete, let's just say an athlete, right? A footballer goes to football. He doesn't go home and start drinking all night and taking drugs. Well, some of them did in the 90s, but the chances are they look after themselves. They get an early night, they eat healthy, they get up, they maybe do some walk to warm up in the mornings, and then they have their breakfast to make sure they're fueled for the day, and then they go to training, and they've got these habits, right? So in your trade plan, you should have a section on your habits. Do you go for a walk? Do you go for, do you do your pre-market analysis, right? That might be part of your habit analysis. Do you go to the gym, right? Do you have breakfast? Do you have lunch? Do you, some traders I know, they trade around the New York and London crossover, and they don't eat lunch until after they've traded because they feel sluggish after they've eaten around lunchtime. So they normally have like a light breakfast and then a bit of a brunch or a bigger breakfast to fuel them through that, and then they eat immediately after their trading session closes because they don't want to feel tired and sluggish and all that, right? So different things for different people. What are your habits? Do you read the news? Do you look at the news at news resources? Do you go through Twitter, right? Do you look at different posts from Bloomberg, CNBC, and all that kind of stuff? Do you look at the calendar? So I look at the news calendar, and you can use forexfactory.com, or you can use tradingview.com because they have a great little feature on there now. If you click on the right where it's got the little calendar icon, click on that and it's got great news releases, news events there. And then routines is pretty similar, but routines is not kind of habits. It's more kind of the times at which you do things, the way that you do them. Okay, so the habits are the things you do, and the routines are the way that you do them. So, first I check this, then I check that, etc., right? And you want to have a section of routines and the order in which you do those habits. Next thing. Emergency procedures. We're looking at emergency procedures. This is an important thing because what you don't want to be doing is reacting in the moment as a trader. You want to have a plan for everything. This should tell you what to do in every situation so you're not reacting different ways based on your emotions and feelings and chemicals going through your body. You want a consistent board game set of instructions, right? So what happens if, right, ... you lose connection. Okay, in your trading account, you get logged out, you get broadband issues, right? You get power failure. What happens? All of these are spelt wrong. My spelling is so shocking on these. You get logged out. What happens if? Wow! Don't tell anyone. Power failure. What happens if you have rage? You know, you might have just come back and got rage with someone or had an argument, right? Family issues, arguments, right? Unforeseen circumstances, things that you just didn't see coming and they've sideswiped you. Okay. Also, you can include emotional. So you might be ecstatic. You might be really over the moon. You might be feeling a bit puffed up and cocky. Those are things you want to check yourself. And those are emergencies to me, because if I've just feel like God, and I go down and sit at my charts, an emergency needs to happen, because that can be just as damaging as me feeling emotional the other way and being depressed and pessimistic. Okay. If you're feeling optimistic, so optimism / pessimism, right? Okay. You can tell I failed every exam at school, right? All right. So you want a way of putting emergency procedures there, right? So that you're not reacting in the moment. Affirmations. These are things that you tell yourself. So one of the things that I struggled with when I went from going to work every day to then coming home and having all the time in the world working from a little office in my house was I didn't feel like I was working, and it was good to reaffirm that I was deserved of making money as a trader, because I'd never done that full time. And to tell yourself, I am a consistently profitable trader. I'm a master of my money. I control my financial destiny. It doesn't control me. I am a puppet master of my money. I'm not a slave to my money. I am a professional. I approach the markets in a professional way. If I trade my plan. My trade plan tells me what to do. I do not know what the market's going to do. The market has one job, and that is to take my money. My job as a professional is to manage risk. All these are affirmations that are going to, if you keep repeating them on a daily basis, you see them on a daily basis, they're part of your plan. This is what's going to make you money. It's no different from a business policy, right? In McDonald's, did you know that in certain policies of McDonald's, they tell you what order to put the mayonnaise, the mustard and the ketchup into a burger bun? And the reason they do that is not because it tastes better if you do the mustard first and then the ketchup. They know they do it because it works. And if they repeat this thing, it will sell this amount and that number will go up if we market it this way. And it's just a repeatable way of knowing the numbers and being able to project figures with confidence. Okay. So you want to be doing the same. You want to be basically making sure that you've got your own policy, your own values, your own priorities as a trader, as in your trading business, that make you who you are. Okay. And if you believe them, if you say them enough and you do them enough and you're congruent with your beliefs and your thoughts and your actions match all that, you're going to do well. It's half the battle. Trading is such a mind game. So have affirmations that tell you who you are as a trader. And I would be really honest about these as well. So when you come to do these, be honest. Don't say things that aren't you. I've been into businesses before where they've got all their values all over the wall. And I talk to one of the employees and I say, do you believe that? And they're like, no, right? So it has to live and breathe inside of you. You have to bleed these affirmations, okay? Next up is journaling. Now, before I get into journaling, I've done a real good video series on journaling alone. I did a 4 or 5 part series just on journaling. But what you're doing is your performance externally, so your skill, you want to review, okay? And then your internal performance, which is basically you as a person, okay? So when you're doing these performance reviews and you're journaling, you want to be able to your ability. So is there a user error? Is there a tech error? Are you in trades you should be in? Okay, so let's write some of these down, right? In trades you should be in, not in trades you should not be in. Excessive risk. Are you taking the right risk precautions? And also correctly managed trades. Did you manage them properly, the ones that you did take. Okay, and when you track these things, that's kind of the technical skill, the user ability. Okay, but whereas if you're reviewing yourself, what you're doing then is emotional. So you're FOMO. You're journaling how greedy or fearful you was to be in the trade or out of the trade. Okay, so you want a way of tracking that. And also journaling is obviously the trade log. So what time you got in, what your prediction was, what your setup was, what your rules of engagement was, what price you got in at, where your stop loss went, where your target went, if you trade multiple positions, where each of those target prices were, what happened, when did you come out of the trade, where did what did the stop loss get hit, was there news out at the time, maybe you had a screenshot to this. Okay, so I'm going to give you guys an entire trader mind map now. You just go to the link, download the trader mind map, and that will give you a ton of things to think about. And also go and watch this series on journaling. Okay, so go and watch the series on journaling, and it will, you'll have everything you need. And then advanced self-review is basically sitting down and going, look, what worked last week? Okay, what worked yesterday? Right? What didn't work last week? What didn't work yesterday? Okay, and then basically, what would I do differently? Okay, and then on a scale of 0 to 10 or 1 to 10, how greedy did I feel on that trade, right? So you're putting this next to certain trades that maybe you made mistakes on or user errors. On a scale of 1 to 10, how fearful was I of taking that trade? Okay, because sometimes you can overtrade, but sometimes you can undertrade. If you've been burned and you've taken a big loss or an excessive loss, following that, it can be hard to get back into the market, back into trading. A bit like dating, right? You get burned and you get stood up or something, or they cheat on you, right? You're going to get back into the market slowly and steadily and very cautiously. So same with your trading. All right, so there's a lot to digest there. What I want to do now is actually take you through the process of backtesting, because I get questions all the time about this. And we've got some rules of engagement here. So we're going to go into a market, and I'm going to bring up a spreadsheet, and I'm going to show you actually how we backtest this, because we've got a section here: one market, one strategy, one time frame. That means I recommend you look at one pair or one market at a time, one time frame and one strategy, because if you're looking at too much on too many time frames at once, you're not really going to build your RAS, which is your reticular activating system. And you want to start getting into the swing of finding one thing, all right? And then once you see that, they'll start popping everywhere, and then you'll have the confidence to go on to the next thing. So let's do that now. All right, so for this example, we're going to bring up a spreadsheet. And in the spreadsheet, first of all, I'm going to have my entry date, my entry time, what pair I'm trading, the time frame I'm trading, the trading system, and the type of entry. This stuff is going to be discretionary to you as a trader. So you could have the condition, which would be, are we in a bullish or bearish market? Are we in a run or a pullback? Have we got support, resistance, indicators that you might use, price deceleration candlesticks and stuff like that? Then you might have your entry price, your stop loss and your target, and then the close price, right? And then some image links, because you might want to screenshot that and put it on the spreadsheet as well. Okay, and you can go and download the template of this in the description of this video. But let's just go to the dollar yen, and for the sake of simplicity, as we've talked about double tops, we're going to talk about double tops, right? So first things first, I'm going to say, right, okay, we've now reached a previous level of major structure resistance. Okay, so we're going to say, right, we have to reach major resistance and test that once. Okay, once we've tested that, we can look for our entry setups, our setup criteria, and for the trading time frame. So this is the higher time frame. Okay, and we're going to pretend that we've got a previous structure here. I'm not going to zoom out because you'll start getting nauseous, but we're going to pretend that we've got previous structure already. And that's our higher time frame bias. We're now saying, right, this is a good place for a double top because we've got major structure looking left. And then what we do is we drop down to our trading time frame. And our trading time frame in this case is the 4 hour, and we've tested. And on the first test, what we need to see is RSI above 70. Okay, now you can see for this example, we're at 72, which is considered conventionally overbought, right? So we need that. We're overbought at this point. So this first test is valid. Okay, now all we need is a second test. And on the second test, we need it to test the first test and not close above it. And we also need some divergence on the RSI. Okay, well, the second test comes in. We test the first test. We don't close above it. We get divergence on the RSI down here, right? Meaning lower highs. And then the rules are, if we get that test, we enter the next bar market. So this candle closes on the 4 hour, and then this candle opens and we enter straight away. So we're entering at 161.64, okay, on the 10th of July 2024. So what we do is we go over here and we say, okay, right. So the entry date, just in case you guys didn't see it, is here, 10th of July 24. We go to our spreadsheet, we say, right, okay, 10th of the 7th, 2024. And if you're in America, you write that the other way around, just for clarity, 2024, just for my American friends, right? The entry time, go back, look at the time. This time is the 10 o'clock candle. We're going into the 2200 candle. The currency pair is the dollar yen, USD, JPY. And this might seem like a monotonous task, but this is welcome to the world of backtesting. It will take you 20 hours per pair, per strategy, per time frame. And that's how long you've got to do. That's just it. And I would recommend trading 5 years minimum or 100 trades, whatever comes first. And you could trade them. You can go and look at those backwards or forwards. And if you don't get enough, go back further. But it's really up to you. So the time frame on this is going to be the 4 hour. I'm trading the 4 hour time frame. The trading system is going to be structure. Okay, so structure resistance. It's a structure-based trade, and the type of entry is going to be a double top. All right. Now, I'm not going to use these in this particular setup. All I'm interested in is my entry price. So the entry price that I got in at was at the close of that one, at the open of the next one, 161.62. Okay, 161.62. Stop loss price. So my stop loss rules. So my stop loss rules are going to be an ATR above the high. So in other words, I'm selling here, right? And my stop loss is going to be 1 ATR above the high. Okay. Now, the easiest way to look at the ATR is to have the indicator on the chart, right? The ATR might be 20 pips, right? Okay. So you're going to go 20 pips above that, roughly around here. Obviously you won't be doing it roughly, you'll be doing it spot on. And target for this instance, we're just going to go down here at this structure level, right? So normally with double tops, I take a bigger target, okay? But because I don't want to zoom in and out of charts, we're just going to go at the retracement again, okay? So we're going to go at the lowest close of this retracement, which is going to be here at 160.54. So the stop loss is 162.19, okay? 162.19, and the target one, I said, was at 160.54, okay? So 160.54. We're not got target 2, we're not got target 3, and then the close date, right? So now you can go back and you say, right, okay, market went from the 10th of July, and then it closed. We hit targets on this candle here, which was the 11th of July, right, at 10 a.m., okay, on the 10 a.m. candle. So, and if you wanted to find the exact time of close, you can go down to a lower time frame and see exactly what time that was hit, all right? But we go 07/11/2024, and we close at 10 a.m., and the position exit, okay, was that price. So the reason you want to put the price in again, which is 160.54, right, this 160.54, is you can build an algorithm or a formula into this spreadsheet like we do in our tier 1 trading one that will automatically calculate whether it was a win or a loss, and it will add up all the pips and all the rest of it. Okay, but this is a basic spreadsheet template. And then you might get a screenshot. So you just go and screenshot the trade. You might go and do something like this, right? Or on the one chart that you use, and then you just stick a link to that in there, or you might even just upload it. You know, you might just go, right, do you know what? I'm going to actually stick the screenshotted image in this actual cell. But that's up to you. So that's how to backtest. It's monotonous, but what you're getting from this is solid data. You keep going over and over again until you've got 100 trades or 5 years, whatever comes first, and then you've got like solid numbers that don't lie. Now, if you want more videos on backtesting, I did do another video quite a few years back now, which I'll link here and in the description. But if you really want to learn more about this stuff, you know, go and check out my Trading for Dummies if you haven't seen that already. But if you're still thinking, right, I want more of this, it's your time. You know, you need to move forward. You need to start getting off YouTube and thinking about this professionally. And I've got different things that you can do. You can come and join us at Tier 1 Trading for a couple of weeks if you want to test the water there. Or you can take the 30-day trader challenge. I'll also put a link in the description. Let me know what you got from this video. Let me know if you'd like to see anything else, if I missed it, and I'll see you in the next one.